regardless. So yes, it came in from Jeremy, who is a private investor, and we met with him in Vancouver, or he was at the conference at the Planet Micro Cap conference in Vancouver.
Hey,
And
Jeremy.
yes,
How's it
I
going?
had some good conversations with him. He's a good guy.
He is.
So thanks for your patience, Jeremy, because it did take a while for me to get to this. And again, it is NTG Clarity Networks Inc. The ticker symbol is NCI on the TSX Venture, currently trading at a price of just 3.5 cents and a market cap of about 5.2 million. So, NTG Clarity Networks Inc. provides telecom and IT software and support solutions for telecom, utilities, enterprise, government, and finance companies. The company has offices in Canada, the US, Egypt, Saudi Arabia, and Oman, which is a country also in the Middle East. Um, Moving on here, the company's revenue distribution is at about three quarters professional services and about about 1/4 products and software. Professional services includes software development, operations support systems, and business support systems, as well as training and security. And their software products include their operations and support systems as well, and business support systems, as well as ERP systems, and their Smart to Go e-business system, which is essentially enterprise software platform for e-commerce. Now, looking at the financial results, long-term revenue growth has been quite volatile, but over the last 3 years, there has been a good uptick in revenue, going from about 7.9 million in 2020 to 17.7 million in 2022, and the business appears that it will put up a record year this year in 2023. So, looking at the Q2 2023 results released in August, revenue was up about 87% year over year to 6.37 million. And this was primarily due to increasing revenue in Saudi Arabia, where they added approximately 10 new customers. And this is kind of just due to the economy doing quite well there because of the increase in oil price. Now, net income was up about 265% year over year to just under 700,000. And earnings per share was half of a cent compared to nil for Q2 of 2022. The company has 440,000 in cash and debt of about 7.67 million. Now, one thing that Jeremy actually listed here for me to kind of look into is I did look at it. Most of this debt, or about 6.5 million, is held by a numbered company, which is controlled by the company's CEO. So the company has agreed to extend the grace period for principal installment repayments until December 2023, just to help with the company's cash flow, essentially, or at least that's what I read in the MD&A. And I did look, the interest rate on the loan is prime plus 2%. So that gives them net debt of about 7.23 million, or a net debt to EBITDA multiple of about 2.5 times. So the outlook. Now, Jeremy provided me with some 2023 revenue projections, which I don't know exactly where he got them. I'm not sure if it's his own napkin math or if the company did publish something. I couldn't find it personally, but he quoted for 2023 expected revenue to be about 24 million and about 4 million in earnings, which would provide a forward PE multiple of about 1.3 times, which is quite low, of course. However, I also wanted just to see where this forward earnings multiple would be if we just annualize Q2 2023 earnings. So the stock would be trading at about 1.9 times forward earnings if we just annualize the Q2 there. And the company also provided some comments and color, again, indicating that Saudi Arabia's economy has been strong due to oil prices. So they note that they continue to have some strong demand in the Middle East. So to conclude, I think the question here is NCI deep value or a value trap? Now, the company has shown good growth over the past 3 years, but will it continue is my major concern. It appears that growth is poised in the Middle East, but the dismal track record of consistent growth does concern me to some degree, and is maybe why we're getting such a discount. Now, the stock is trading at a very low forward PE multiple, But again, it is somewhat expected given the weak track record and consistent growth, and of course the exposure to the Middle East. Now, the balance sheet is reasonable and management is aligned with shareholders with large insider ownership. However, I do wish that the company's share count was a little cleaner, as I believe they've got about 148 million shares outstanding. That's basic. I think they've got 167 million diluted. But even in Q2 of 2023, when the company posted around 700,000 in earnings, this only equates to half of a penny per share in the quarter. So it's kind of hard for them to create significant earnings. Now, overall, if the company can replicate the growth over the past 3 years, there is a case that the stock offers investors deep value. But due to the tiny size of the company, lack of track record, lack of liquidity, as well as exposure to the Middle East, it is not a stock that we would recommend to clients. But thanks for sending it over, Jeremy. I did think that it was interesting. The valuation is compelling. Again, if growth can continue, which I have a question mark about. I'm not too sure if I'm convinced that it will, or at least for 2024 and 2025. Afterwards. But as well, I'll open it up to the guys here. But as well, if there's anything that I missed, please leave a comment on YouTube or send me an email. And maybe I can even just comment it on YouTube, just if anyone else is curious.
So you mentioned that the market cap, is 3.5 million.
Is 5.1. Sorry,
yeah. 5.1. Okay, but 35% is insider owned. Correct. So only about 2/3 of that. Only about 2/3 of that is actually publicly trading. I mean, we couldn't recommend it to our clients, even if we liked it. It's just they couldn't buy it. It's too thinly traded. But debt, again, remind me of the how much debt they have.
They have, it's 7.7 million in debt. 6.5 of it is owned or owed to a company that the CEO basically owns as well. So it's like a number company basically.
Okay. Right.
Yes.
And it's all variable debt.
Most of it is variable debt. Yes.
Okay.
Yes.
Well, so that's more. They have more debt than their market cap. You highlighted the net debt to EBITDA. I'd be interested in seeing the interest coverage on that, given that they're paying what, like you said, prime plus 2.
For this, yes, it was for
it's actually pretty good.
6.5 million that they owe to the CEO. Yes, it's prime plus 2. Okay. And again, it looks like the CEO was basically allowing for no principal payments until 2023. I don't know if that technically benefits him if rates continue to rise, and maybe he
I think it's probably more just like, how's the company gonna make principal payments, right? They need their cash flow and they don't want to raise shares at this price, and any debt they get is probably going to be a lot more expensive than that. So
for sure.
Because prime is about 7.5%, I believe. So I mean that's a pretty good rate for a company that size. I think that a lot of companies that size, if they went to the market, they'd be looking at 10-12% probably.
Yeah, for sure.
I mean, if they can hit the forward numbers that you have on there, but you couldn't confirm those, you didn't see them anywhere. But if they get hit there, it looks on a valuation basis. If you took out, the fact that it's hard to buy and sell, liquidity issues, and the size of it, it looks relatively attractive. But there is IT services, the recurring nature of the business. I know in the past it's been basically contract driven. I'm not sure now. We haven't looked at it closely in several years. So if it is just contract driven, it can be a bit boom and bust in terms of, you don't have that. It's not like a SaaS business model. At least it was not in the past. Correct me if I'm wrong. Anybody out there on it now, that would be, you got to continue to have contracts. So I would look at and track a backlog on this business if they have that, and to see where we are in terms of their backlog. If it keeps going up over time, if it did, might be a good sign. They obviously have to make a good margin off that backlog too, but you would hope they would be, and that would be something I would track on the business as well. I'm not sure if they have that out there. So interesting, but certainly a small company, and Brennan got it answered there.